This is Alan Farley from FX Empire. DraftKings is trading marginally higher on Wednesday morning after the New York State Legislature approved mobile gaming. Looking back, the stock came public in 2019 right around $10, got up into the lower 20s in the first quarter of 2020, and then pulled back, formed a little base, and broke out in April and May, taking off into a very strong rally impulse that got up to the mid 40s in June. It settled into a very nice rounded correction and took off once again in September, topping out in the mid 60s in September and the beginning of October. Stock then got cut in half, which really did a number on investor sentiment because investor sentiment still hasn't recovered, as you can see from the steep decline back into November on OBV. But the price did bottom out in the 30s and start to head back up, returning to the prior high in February. Now, it completed this little cup and handle pattern you can see right here and took off and broke out, but it's been anything but smooth sailing since that time. We have three marginally higher highs here, which is usually not a good thing. It's sort of the three soldiers pattern. And then we have a breakdown through the breakout level in the mid 60s. Now the stock is trading right at that resistance on Wednesday, and as you can see, price action since October has come down to this trend line. Well, we're stuck between a rock and the hard place here, and we have to wait and see which side's going to win because we get a little breakdown. This black line right here, the stock could go all the way down into the 40s. Now, there's plenty of competition to mobile gaming right now, and that's probably why DraftKings is running into so many problems. But we're going to have to just wait and watch the resolution of this very complex volatile pattern and also see if OBV starts to improve because we have this major bearish divergence where it only did about half the distance to the prior high when it broke out to the all-time high in the mid 70s. So it's really a stock to avoid right now until the technicals resolve.